What's up, guys? Welcome back to Track the Harmonic. I'm your host, Lord MC, and in today's episode, we're going to be talking about harmonic technical analysis and what we can expect in the markets for the upcoming week. So, for those of you guys who don't know, this is a harmonic technical analysis channel, and essentially, just harmonic technical analysis is a form of technical analysis that uses specific patterns to identify potential trend reversals or price targets. These patterns are based on a bunch of factors, but one of the main factors being is that Fibonacci ratio and harmonic price patterns. So they can help us provide valuable insights as to where the markets might be headed to, or more to say, where the markets might reverse. So looking ahead into next week, we do have several Federal Reserve members scheduled to speak, including Fed Chair Jerome Powell. So this will undoubtedly have a significant impact on the markets as investors look for clues about the future direction of the interest rates and monetary policy. Having said that, the Fed, as most of you guys know, has been signaling that they are willing to let inflation run a bit hotter than usual as they aim to achieve their long-term inflation target of 2%. However, if inflation does continue to rise faster than expected, the Fed may need to adjust their policy stance, which could cause volatility in the market. So, one thing to keep in mind is that the markets have been experiencing a lot of uncertainty lately, with concerns about inflation, the global economy, geopolitical risk, banks, and now obviously what they're adding into is the debt ceiling. So this uncertainty can make it difficult to predict where the markets will go into the short term, but we can expect to use harmonic technical analysis as to give us maybe an insight of where that may be headed to. So what can we expect for the markets this coming week? Well, with so many Fed members speaking, it is likely that we'll see a lot of volatility. So we will have to be closely monitoring these remarks of any hints about the Fed's future plans, and this could cause significant swings in the market. So as for specific price levels to watch, we'll be looking at some of these patterns here to see what the market's been telling us in the indices and the blue chips. So overall, harmonic technical analysis can be used as a valuable tool for us as traders, especially in times of market volatility, by identifying key patterns and levels, so we can make more informed decisions about whether to enter or exit positions, how to manage risk as well. So having said that, before I get into the charts, I want to preface by saying I am not a financial advisor. None of the things I say in my videos or anywhere else is ever financial advice. So question everything, do your own research, and come out with your own conclusions. So having said that, let's jump right into the fun stuff. So here, SPY on Friday went as high as 413.64, the low being 407.07 before closing the day at 411.59. So this whole week, at least for the SPY and in the markets in general, you've been having low volume, in my opinion. You had Monday and Tuesday very low volume. You had Wednesday on that spike for the data that came out for that day, and then you continue to have average volume into Thursday and Friday. So harmonically speaking, here on the SPY one day, you do have a bearish bat pattern where you have came down to that target one here, but are now hovering just below that 414.02, which is having a strong level of resistance there. It cannot break up above that. So you did generate an HSI dot on Thursday, and you closed just below Thursday's close. So into Friday, intraday Friday, it was a little bit of a concern there where SPY did lose that 411 target that I had as a level of support, and it luckily reclaimed it back up at the end of the day for those are people who are going long into the markets right now, specifically in SPY. So it did hold 411. So what can we expect moving forward? I would like to see the volume pick up, because some of these ranges that we're back again, we're just been trading in between this 414, and as you could tell, the lowest we've gotten down to is that 50 EMA here, where the 50 EMA is now at 406. So as you could tell from the previous patterns here, previous times we visited the blue line here, which is the 50 EMA, we bounced hard and continue pushing back up to the X8 here. So the last time we did that here was back in in May the 4th, and we came back up, touched X8, we got rejected, and now we're kind of almost in the same path here. So if SPY does continue to come down and lose that 21 EMA at 410, you could see potentially SPY come down here to that 407 where that 50 EMA is at, and then losing that, you would come down to target one at 401.93. I'm going to bring out my drawings here. Should you come down to test that 50 EMA, you do have that gap fill at 407 and change, which would get filled if you drop below that 50 EMA. So as far as what we can expect to the long side, if you can claim above 414.02, you could potentially start looking to enter this gap, which has been rejected here off of this 2009 trend line that I have drawn here. So this has been a strong level, at least SPY, to break above 414. So you definitely need volume. Harmonically speaking, on the HSI, you do look like you want to come test that midline. So that midline test, losing that midline test, and if it continues to come down to those oversold zones, you could potentially see target 1 at 401.93. A target I'd be looking at for into next week for SPY is, again, for losing 411. If you lose 411, in my opinion, the next level of support would be 408. Losing 408, you could fill this gap, and then my next target for me would be 404. Losing 404 would be a little bit concerning. You come down to test target 1, finish that type 1 reaction. Losing target 1, which is where the 200 EMA is here, you are going to come and test that gap fill potentially. And my target here for me to switch to the bearish case scenario where the market is probably turning a direction here would be losing 396. It's a key level of support here, 396.13. We're not there yet, but we will have to definitely keep an eye on what the Fed says into next week. If I jump over to the weekly and see how we did on the weekly. So on the weekly here, we did have lower volume than the previous week, so what we expect into next week here. Looking at just at the weekly chart, let me just remove my drawings here. We did bounce off the 9 EMA. You are kind of left here with not a picture perfect, but it is a semi doji here. You did get the 2050 crossover here, but you had 2 weeks in a row where you tested target 1 here at 404, and you did bounce hard off of it. So it's going to be interesting to see if this hammer candle here was actually the sign of a reversal and you come back down. So on the weekly, you do have this bullish deep crab where if you lose a 9 EMA, you come down to test 407 where that gap fill is, and then test the 21 EMA here where this target 1 is 404 and change. Losing that, you come back down potentially, obviously down to test potential 357 and then hop at 324 down the line. Too early to call it if that's what the market's going to do, but it's very interesting here that we've been trading in this range here for a while. So when that breakout is going to occur, you're going to definitely see volume. So whether it be this week or we still have to wait until I think PC at the end of the month or whatever data comes out, or maybe they are prolonging the government, the Congress is prolonging this as well because there's a whole debt ceiling situation right now. So they could be extending this into June, July. So we'll have to definitely see what comes out of that. Jumping over to the triple Qs here. So the triple Qs on the Friday did close at 325.03, went as high as 327 before the low being 322.94. Harmonically speaking, off of this bearish bat, you are still climbing to create higher highs here on the triple Qs, as the triple Qs looks much stronger out of all the indices here. So if on Friday you did get higher volume, so the volume has still been significantly on average, it was low during the beginning of the week, but it's been average volume for the triple Qs, which you did bounce off on Friday off the 9 EMA here. So if you can continue finding support off the 9 EMA, you could come and test that hop level at 330.99, which would, in my opinion, after testing this level, you could expect for that type 1 reaction back down to test 313, 305, and then finish that type 1 reaction at target 1 at 291.95. So if you do lose here the 9 EMA, the next level I'd be looking at, which has been a key level here, would be 318.72. 318.72, as far as you could tell in this range here, the most recent range we had in February and April, March and April, you've just been kind of had a lot of resistance when you were trying to break above 318. So if you do continue to fall here, if you lose 318 support, you come down to XA here. As far as every time we've lost the 21 EMA, you've actually bounced hard here. So you could bounce off here around 319, kind of close where that 318 level is, and then continue pushing back up with strength to test hop. If not, you're coming back down to test the 50 EMA here, where XA is at 313, BC at 305.69, on and so forth, down to target 1 to complete that type 1 reaction should it go there. If we jump over to the weekly here, so the weekly, you are having a decrease in volume, but the average is there. It's still green. It's still created a higher high from the previous week. So harmonically speaking here, you don't have a harmonic pattern here, but as far as the strength of the NASDAQ is clear by day. If you look at the weekly here, you had that 2050 crossover and you continue to make higher highs. You are still not oversold on the weekly, and the HSI is looking like it wants to push up. The HSI dot that generated here kind of was lagging here as prices continues to increase up onwards. So definitely keep an eye out on the triple Qs here. Jumping over to the Dow Jones. So the Dow Jones, interesting here because you do have a bearish harmonic bat pattern where you have already done a type 1 reaction here back in May the 4th, and you bounced off of target 1 here at 330, came back up, and now you are also generated on Friday a hammer candle here where you got close to testing 330.96 but just went as low as 331.31 the day before closing the day at $333.20. So the volume here at least has picked up somewhat here to the sell side for the Dow Jones. If you cannot break above here 335 and reclaim the 21 EMA, you will come back down, get rejected here, and you potentially see that 330.96 potentially. Lose 330.96, you come and test the 200 SMA at 327, and then finish that type 1 reaction at target 2 at 324.86. Should you bounce off and reclaim the 21 EMA, look to reclaim XA here at 340.27, and then look to get above 343, which has been a level of resistance here so far. You got rejected here, 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 and somewhat here. So if you can reclaim this, and then obviously the highs here at 345, then you could look at hop to complete that type 2 return back up to hop at 347.56. So the HSI did bounce off of on Wednesday off the midline, and it looks like it maybe could come back down to test target 1 at 330.96. So if we jump over to the weekly on the Dow Jones, decrease in volume, but it's decrease in volume to the sell side. So buyers have not been stepping up, in my opinion, or just enough to step up here and just make sure the indices don't lose critical levels. But you do have what looks like a double top here forming. So if this comes back down, you draw the neckline towards here. So that would be the 328, 327 range here. If you come back down, you go all the way down to fill the gap here, because there is a gap here at 313 and change. So harmonically speaking, you do have the HSI here is coming to test that midline, so that midline would probably be where the 50 EMA is at 330. So if you find support there, you can come back up. But yeah, that's it, all I have for the Dow Jones. We come over to Apple here. So Apple on Friday finished the day as high as 174.06, or low being 171, and closing the day at 172.57. Apple has been continuing to make higher highs. Obviously now it looks like it's consolidating between what looks like to be 173 and 170, where it's finding support at least at the entrance of that gap. It has bounced off of, it did fall below the, let me move my drawings here. It did fall below the 9 EMA on Friday, but reclaimed it and closed above it. So what can we expect here for Apple? Apple, as you know, has been trading in this channel, creating higher highs and higher lows. So it did need a little bit of a breather room here when it comes to volume, because this thing has just been kind of going crazy insane here. So I do think off of the HSI midline here bounce, you could come back and bounce here, maybe test the entrance of the gap here, and then continue it bouncing on upwards to test the I believe here this would be the 100% retracement of the harmonic pattern here at point A, which would be 176.15. So if you clearly above that level there, the next level I'd be looking at here harmonically would be the 1272 of this harmonic pattern at 188.73, which would obviously be new all-time highs. Obviously after 176.15, you'd be probably look to test 182 and change, whatever the all-time high is, 182.88, before continuing to make new all-time highs at 188.73. So it's crazy to think to say that Apple is very close. It's only about $10 left for reaching these all-time high levels, which is crazy, but it is what it is. We're here now. So as far as the volume did pick up on Thursday and Friday for Apple here, but it's still in my opinion it looks good here. It may be trying to consolidate here again, and then for the next move in the market. Going over to the weekly here, Let me remove some of these drawings now. There's a bunch of lines on Apple, but bear with me here. On the weekly, you clearly did a type 1 reaction, which is a scalper's dream, as I like to call it, way above target 2 at 160.49. If we take a fib retracement tool from point A to point D, we can see what that next level would be. Where it's at right now, it's looking to test the 176.24 and then 182.94, which would obviously be the all-time highs here of Apple here. Should you break the 100% retracement, like the weekly is calling for 198 as a new all-time high after that. Crazy to say, but I mean, with what's going on right now, who knows? Anything's possible, I guess. He did close on the weekly on a doji candle. The RSI was almost overbought here, but it is coming. Looks like it's trying to curl down. So what can we expect if Apple doesn't continue pushing or consolidate? You look to retest maybe the 90 EMA. As far as on the weekly, you have found support off the 90 EMA. You've been clearly above the 90 EMA. The only times you did touch it were 2 weeks ago here off the 90 EMA and bounced off of it. So we go back just to the daily here and bring up my drawings. This is what I would have if you would finally lose a 21 EMA, because as we could tell here, it was once, 2 times, 3 times. Every time Apple has found support off the 21 EMA, you continue to make higher highs right here, once again here, and then once again here. So if Apple is to continue to lose the 90 EMA, you could enter this gap here, potentially fill it, lose the 21 EMA, because you have fallen below the 21 EMA here just a tad bit, but you could lose that 21 EMA, test 166.25, which has been also the level here where it finally broke out of. So if you lose the 21 EMA, you finish this gap here. If you lose 166.25, you look for 163.27 and then target 2 at 158.48. After that, you just have just more levels of support now for Apple, but we'll see where Apple goes into next week. Jumping over to Microsoft here. So Microsoft, similar looking chart to Apple, except for the fact that you do have a bearish bat pattern off of Microsoft. So Microsoft, for the past, since the start of the month here, you can tell that the volume has kind of been mediocre, medium level to average. Only a few pops here. Most of them have been through because of day-to-day and news. So you are looking like Apple here, Microsoft could be coming here up for a rising wedge here. So you could start coming down, but who knows how far up that rising wedge could climb up to. So if we're looking at this from a harmonic standpoint here, that rising wedge could take it up to hop, and then finally you can come back down to that type 1 reaction. So so there, Microsoft does have a dividend here on the 17th on Wednesday to see if anything happens with that. As far as last dividend, you got dividend here, the price came down, so this could go either way. Sometimes it goes up, sometimes it goes down, right? So like over here, dividend day was this day, the 16th, and you continue pushing up. So who knows? Microsoft has been going a little bit crazy as well. The highest high was 313 in the 52-week highs. So if you find support here after 9 EMA, the next level we'll be looking at harmonically would be 330.41. The HSI is calling for some potential downside here. Maybe you test XA at 304.26, you lose that 13 EMA, you come down to test at 21. As far as Microsoft on the daily, the lowest it has dropped and tested in the last couple of months here was the 50 EMA here. So if you lose a 21 EMA here, you come and test BC here, 292.71, potentially fill this gap, find support maybe off of the 50 SMA here, and then continue back up. Otherwise, if you don't find support here where the 50 SMA is, you come back down and do that type 1 reaction all the way down to 272.45. Losing that, you will have support potentially at 267. Failing that, you come down to potentially target 2 down to 249.91. So jumping to the weekly here on Microsoft, and you're still looking like a doji indecision here with average volume, same volume as the week before. You do have a harmonic Gartley pattern on the weekly here, so you have yet to do a type 1 reaction here. You've finished the type 2 return back up above hop. So what can we look forward here, at least into the weekly here, where you were a bit almost overbought and you are potentially coming down to test 297.89 should you lose all those critical levels on the daily chart. But right now the volume is kind of decreasing the past 2 weeks on Microsoft, especially with what a crazy ride it went through the past couple weeks. So having said that, let's jump over to Tesla here. Some of these drawings here. So Tesla has a ABCD pattern, still potentially playing out. You kind of did finish that type 1 reaction here to target 2 at 177.31 off of the news that came out, I believe was Thursday, with the whole new CEO of X and Twitter. You did reclaim, you tried to reclaim 177.31, but unfortunately you closed the day at 167.98. So what can we expect here for Tesla coming into next week? The HSI is looking like it wants to come down to test that midline. In my opinion, that midline would probably test it down to the potential target D here at potentially at all the way down to hop at 147.06 if it doesn't find support off of the 9 EMA here. As far as bringing my drawings here, in order for Tesla to continue pushing, it needs to find support off of 164.67. If you don't find support off 164.67, you could come back down and enter that gap and potentially fill it as well. So as far as Tesla, in order for this to continue pushing and going to create higher highs here off of this channel and not create lower lows here, you would need to reclaim 177.31, where you would fill that gap. Did we fill this gap here? No, we still didn't fill this gap on Friday. So if you could reclaim target 177.31, in my opinion 177.12, this range here, and find support, consolidate here, you could potentially come back here, test and fill that other gap here at 184, and then finish that type 1 reaction all the way to target 2 at 192.71. This is a key level in my opinion for Tesla here at 177 to reclaim. Otherwise you are going to come down and potentially fill that down below. The capitulation, in my opinion, again starts at this 164.67 for me on Tesla. As you could tell from previous times we were down in this level, where you capitulated all the way down here. So definitely you'd want Tesla to hold on to this 164.67. Otherwise you could see that fill the gap there, a hop at 147.06. Reclaiming 177 and consolidating, getting more volume, you could potentially see down the line to get Tesla above $200 potentially. So if we jump over to the weekly, move some of the drawings here. The weekly does have a bullish bat pattern where you did lose BC at 171.46. So volume is kind of significant right now to see if this is going to continue going pushing down. So if we don't reclaim back above 171.46 off of the weekly bat pattern here, your next target you would potentially test is XA at 127.88. This is obviously on the weekly, could take some time, but there is that harmonic target there. Should you find support 171.46, the next level you want to reclaim obviously would be the 200 EMA here at 184. Then you can see it for that type 1 reaction, target 1, 221.26. So HSI on the weekly is kind of flatlining. So the only thing we could expect here is just to wait out each day to see what Tesla does. So definitely keep an eye out on Tesla. Jumping over to Amazon here. So Amazon on Friday did go as high as 112.64, the low being 109.32, for closing the day at 110.26, right? So Amazon did get a very bullish breakout here on Thursday. So it did generate a new harmonic pattern, which is this new harmonic bearish bat pattern here at the completion of point D. So what can we expect here? It's too early to tell whether this is going to come back down to test target 1 or go up to hop, right? But you do have a HSI arrow generated here. It's off of lower volume than Thursday and Friday, but it is there. The HSI did reach that overbought zone here, as well as you could tell the RSI is kind of like peaking here and coming back down. The same thing with the AMP RSI. So if you don't hold support here and reclaim XA, the next level of support I would look to see if it can hold would be the 200 EMA at 107. So 107 was a key level for me for Amazon to break out, which it finally did here. But now you could come back and retest that to see if you find some support off of here. So if you do find support off the 200 EMA here at 107, look to reclaim 111 and then 117.65 on Amazon. You lose to the 200 EMA here, you could fill that. You can come back down. There is a gap here, I believe so. I haven't drawn. Yep, there is a gap. Let me just put that on the chart here real quick. So if you lose the 9 EMA here, you could potentially test that 200 EMA at 107 where that gap fill is. You lose a 21 EMA, you come down and test target 1 at 103.67, finish that type 1 reaction, and then you would hope to reverse here if you're trying to play this long. Otherwise, if you come back to test target 1 at 103.67 and not hold this level of support, you come down and finish that type 1 reaction all the way to 97.73 where target 2 is at. If we look at the weekly, you see how it did. On the weekly, it had a very interesting week. Obviously, it went as high as 113.28, right, with volume, same kind of amount of volume as last week. So harmonically, you did get here the 921 crossover, and this, in my opinion, because of that, you kind of closed above the 50 as EMA here. So the HSI dot here was generated here. Obviously, that didn't come to fruition here. If you could look at this as a downtrend on a hammer candle, this would be the reversal, right? So if you're looking at this from a weekly perspective here, off of this bullish bat pattern on the weekly, the next level of support, or excuse me, resistance, would be the 200 EMA here at 120.06, close to that target 1 here at 122.39 to finish that type 1 reaction. If you get rejected there at that target 1, you can come back down, like I said, fill that gap. XA is a target here at 93.54. Kind of too early to tell what's going to happen, but the HSI looks like it, at least on the weekly, wants to come up and test that overbought zone. In my opinion, that overbought zone would probably be around where the 200 EMA is first, but it could always overextend past that. So definitely keep an eye out on Amazon. Jumping over to Google. So Google, the Googs here, what an amazing week. This has been one of the stocks that I've been charting for the past month, 2 months, where I've said that this thing was going to make an explosive move to the upside alongside Amazon and Meta. So, but finally, this week, Google broke out of this long channel here that it was trading in. And obviously that was because of a bunch of news that came out with the whole Bard and their AI and their event that they had. I believe it was Thursday, Wednesday, I don't remember. It had positive results here. So off of this bearish outbat pattern here, you did pass top here at 113.47, and on Friday you went as high as 118.03, the low being 116.11 before closing the day at 117.51. So volume did pick up here off of this break here. I also mentioned that you wanted to look out for that golden cross here, and that golden cross actually played out, right? You jumped up and you gapped up here. I'm going to put up a gap here because there is a gap now. So what can we expect moving forward with Google is this is going to continue pushing upwards. So right now the RSI is a little bit overextended, and the HSI also is about to be overextended, and the AMP RSI as well is overextended. The AMP RSI looks like it's possibly flatlining, maybe curling down, but I do expect some type of cool off here. Maybe you come back down, test that entrance of the gap here at 114, maybe fill it where hop is. If you fill it, it'll be around 113, and then continue pushing back up, finding support around 113, and then push up forward. So if we jump over to this previous harmonic pattern here, which is this deep crab, we could figure out what would be our next target if it continues pushing upwards, right? So off of the 886 retracement, off of this deep crab pattern, the 886 would be at 118.94. You cross 118.94, point A would be the 100% retracement of this pattern at 122.43, and then finally the 1272 at 130.76. The weekly gives us a better indication, because I do believe there's a bullish harmonic pattern there where, man, it doesn't get any better than this on a candle close with Google. So there could still be strength in this, right? You have this bullish crab pattern at the completion of point D here. You kind of hovered, and you already started to do that type 1 reaction, which you clearly broke above target 1 here at 109.39. So harmonically speaking, if you finish this type 1 reaction all the way to target 2 would be at 125.49. There is strength to support this move here. You looked like you almost engulfed It depends on who you ask, right? And what your definition is of an engulfing candle. An engulfing candle is obviously, in my opinion, you need to engulf the wicks as well as the body, just basically the whole candle, because that just, in my opinion, signals strength. But if you're just looking at to engulf just the body, you did engulf the body here, right? So you engulfed this candle as well, but it's just a strong strength. There's a strong close for Google for this week with strength. So I think, at least looking at the RSI, this still has room to go to that overbought zone, which would, in my opinion, would be that 125 target. HSI looks like it also wants to climb up, and RSI reaching those critical levels here, but who knows? There is still, I think, some gas left in the tank for Google here, but I wouldn't mind Google coming back down, test 113 again, test and potentially fill that gap, maybe even come down to test that 110, reset the RSI, wait, consolidate, maybe you have consolidation because of the Fed talks, and then you continue pushing. But definitely still keep an eye out on Google, because I still think it has some room to the upside. Jumping over to Meta here. So Meta here on the day did close the day on Friday at 233.81. The high was 236, the low was 231. So far, Meta still has yet to fill this gap here. It has found support off of the 13 EMA here, and it's relatively on lower volume here. It's still kind of, a RSI is kind of flatlining here. The same thing with the HSI and MPR. So we don't have a harmonic pattern, a recent harmonic pattern here. So the only thing we can look at here, this playing out, it's past the 30 bars that's recommended, but that doesn't mean we cannot look at these levels for support and resistances. So if you can find support here off the 21 EMA, which has been a couple times, it has come back up and tested the 21 EMA and continue pushing to create higher highs. If you bounce off and lose the 13 EMA, you could potentially test here 227, fill that gap at 215, where kind of close to that 50 SMA is. Otherwise, if you do find support after 221, you can look to retest and claim back 243 and then 251 off of this target one here off of this previous harmonic pattern here. So let's look over on the weekly, see how we close, because right here we do have a bullish crab pattern on the weekly, where you did get that 2050 crossover, and the last week of April you reclaimed the 200 SMA here and you closed just below it. And right now, this previous week, fortunately, wait, what does it say here? 200 SMA is at 233.07, and we close, yeah, you close actually above it again, slightly, you can't tell, but if we bring it here, you close above the 200 SMA. Looks like you could be potentially on a falling wedge on the weekly here, right? So let me just bring it here so you guys can see what I'm talking about. You can have like a falling wedge. Falling wedges are overall bullish, and you can break back up here to test that target one here at 251.26 here off of this bullish bullish crab pattern. So this looks kind of crazy here. You could also see that you had a inverse head and shoulders here. It's a little wonky, but you had that neckline and you crossed above it, right? You could also see that this is also a potential reversal here, right, which you're kind of stuck here right now. See if you can get above it, right? Even the V-shape could even take all of this into consideration, right? So if you can reclaim 251.26, you could complete this type 1 reaction all the way to target 2 at 302.07. Kind of crazy to say that, but it is with Meta. It has taken a beating, so who knows? Otherwise, if you offer this bullish crab pattern, if you do test target 1 and you get a resistance here, you can come back down, fill that gap at 215, losing a bunch of levels here. You have XA at 172.65, filling another gap at 155, and then hop at 116.13. So I still think, in my opinion, right now Meta is also consolidating. There's lower volume, so as we know, when there's consolidation periods here in the chart with low volume, it could signify that a potential move is coming and a breakout with either to the upside or to the downside. But we're going to get that volume once that occurs, so we'll see if it happens this week. In my opinion, I think as far as the whole thing with the debt ceiling, it's been on everybody's mind right now, and just, you know, politics going back and forth about the debt ceiling, about raising the debt ceiling or not. So I do think maybe that's some of the reason why on Friday you had a little bit of a bearish close. So we'll definitely have to keep an eye on what Congress says about that. And if we just cover over here, first JPM here, to look at JPM. So the banks are still taking a hit here. During the end of the day here on Friday, they did come down here, especially JPM here. So the reason why I look at JPM, because JPM has been a lot of the news lately, and buying out banks and whatnot. So if we're looking at here at Shark, at this bearish Shark pattern here, you are coming down. I think you did come down on Friday. You did test here target 1. You completed that type 1 reaction at 133.24 off of increase in volume, and now you engulfed Thursday's close. So if this continues selling off into Monday, into next week, look to test the 200 EMA here at 132, and then you can see this gap fill here at 129.22. Otherwise, if you do find support here off target 1, 133.24, look to reclaim 136, potentially get back above 141, do the type 2 return all the way up to hop at 147.31. So the volume is starting to pick up on JPM here. So definitely keep an eye out on the banking sector as more fear lingers in everybody's minds with that. And if we jump over to the VIX here, so the VIX, even on Friday's kind of bearish close, it did close the day at 1706. So it's still below 20, which is still okay. It still doesn't mean too much fears in the market. So, but if at any time, like I've said before, VIX can start climbing up and shoot up to that 20 level range. So I do have here this 1587 level here where it has found support. So we definitely keep an eye on that to see if it comes back down to 1587, or it climbs back up, reclaims the 21 EMA at 1772, and then pushes upwards to 18, and then for that type 1 reaction at that type 2 return back up to 2231, 2556, and on and so forth. So definitely keep an eye out on the VIX. So that's all I have for you guys. I will be streaming tomorrow, same time as always, 15 minutes before the bell. So if you're interested in that, the link to my Twitch is in the description box below. Also, if you would like to try out the Discord here, I do have a 5-day free trial, which that will be coming an end on May the 18th. So if you want to try out the Discord, see how you like it, just the link will be in the description box below to my Discord. Test it out, try the 5 days, and if you like to join, consider upgrading to a membership tier. So other than that, I hope you guys have a good week, rest of your weekend, and I will see you guys bright and early tomorrow. Take care, everybody, and peace.